Get going today. Um, Welcome, everyone, and thanks for joining us. My name is Natalie. I'm the event manager at Employment Hero, and I'm going to be your host and moderator today. As we head into 2026, many employers are navigating complex waters when it comes to benefits, rising costs, shifting employee expectations, and evolving compliance requirements. So that's why we put this session together today. We want to help you prepare so you can hit the ground running next year. Today, we're going to lean into real conversation to help unpack real challenges, practical takeaways, and actionable strategies to help you streamline your benefits planning, um, manage mid-year changes, improve your communication, and stay ahead of the trends shaping in 2026. We would love this to be an interactive session, so please, if you have any questions, you can use the Q&A button at the bottom of your screen, and we will have time at the end to answer those. I am excited to be joined by three amazing experts today. We've got Lauren, a VP of Group Benefits Sales and Portfolio at Employment Hero. Her expertise lies in crafting benefit strategies that balance value, compliance, and competitive offerings, which is especially important in a tight labor market where benefits can differentiate your employer brand. Stephanie, also from Employment Hero, is our VP of Benefits Implementation and Experience. She brings deep practical insight into what it really takes to build, implement, and manage benefit programs that scale as companies grow. And finally, our special guest, Danielle Constantine, the Chief Operating Officer at myHSA. Danielle will bring a different lens, sharing how a health spending account, or HSA, and similar flexible benefits can meaningfully support and empower your employees, especially in today's shifting benefits landscape. Together, we will look at benefits planning from multiple angles, implementation strategy, and employee-centric flexibility. Before we dive in, we definitely want to hear from you. I'm going to pop up a poll here, and we really want to know what your biggest challenge is when it comes to benefits planning. So if you'd like to take a moment and fill out your answer there, that would be great. We'll leave a couple moments for that before we move on. Awesome. Looks like oh, just when I thought it was slowing down with the answers, a few more popped in there. But I think majority has participated, which is really great. Thank you so much for that insight. I'm just going to end that there, and I'm going to pop up the results just so you can see. Um, I don't think this is probably a shock to any of us that budget and renewal uncertainty takes the cake here, which leads us into our first kind of question for our panelists today. Lauren, I'm actually going to start with you. We're seeing costs rise across almost every part of running a business, and benefits are no exception. From your vantage point, what are the key drivers behind those rising benefit costs right now? And are there any strategies that employers can use to help contain or manage those costs heading into 2026?
Thanks, Nat. Seems to be the million-dollar question. I think everyone is curious what they can do with the, of course, rising costs. We just saw the results of the survey, so thanks everyone for sharing your thoughts with us. There's a number of contributing factors, some of which we don't have direct control over. We look at the economy, of course, cost of production, services, inflation. But when it comes to group benefits, we are noticing an increase in health claims. So every year, Benefits Canada, they actually conduct a survey and they gather information from both plan sponsors, so employers, and plan members, so multiple lenses here. And this year's data, it suggests that the vast majority of people who completed the survey report feeling or being very healthy. But when we look at data, so claims utilization over across a number of plans, all of these benefit plans, privacy is always at the forefront. 46% of rising costs are specifically correlated to treating chronic illnesses and conditions. The top ones coming through are depression or anxiety, heart disease, diabetes, chronic pain, arthritis, and obesity. Those are the top. Now, I'm sure the moment I say that, right away our thoughts go towards prescription drugs. Our prescription drugs, we're maybe thinking for those of us who have a benefit plan and have gone maybe through more recent renewal, oh, I think I've saw more, high cost drugs hitting the benefit plan. Yeah, and I'll pause there because I'll come back to that in just a second. But what we're also noticing is as a society, we're taking a more holistic approach to treatment. So not only are we taking a medication that's been prescribed to us, but we're also seeking other treatments, such as maybe working with a mental health practitioner, a psychologist, a social worker for chronic illnesses. Maybe we're or chronic pain. Maybe we're going to the chiropractor, doing physiotherapy. So we're not only leaning into kind of one method of treatment. So with that, yes, we are seeing a rise in the number of high cost drugs hitting benefit plans, but in the number of prescriptions on a plan, not necessarily just high cost. But in addition to that, we're also seeing a rise when it comes to paramedical utilization, which is our chiropractor massage, our acupuncture. Now, specific to prescription drugs, I just mentioned, we are seeing more high cost drugs hitting benefit plans. And if we were to rewind 5, 10 years ago, prescription A used to be used to treat one condition. Now what we're seeing is prescription A is treating 1, 2, 3, 4 different illnesses and or conditions. The most well known is Ozempic, what it was created for in relation to kind of what it's being used for today. So the last piece to the puzzle when it comes to the costs is, and I'm sure when I say this, everyone's going to agree, just things cost more money. They really do. Services, when we look even at pharmacies, there's something called a dispensing fee. And that's basically how much it costs for a pharmacist to collect a prescription, put it together, prepare it. And those costs are going up. Those costs are going up because, of course, owners of various pharmacies, they have to pay their employees. Their overhead expenses are going up. So aside from more illnesses and or conditions, higher paramedical utilization, it's also as simple as costs are going up. Now, there are different things and strategies that we can use to mitigate the risk and predict kind of the utilization as we move forward. And I'm a big believer of a hybrid plan. So leveraging spending accounts, for example. And actually, Danielle, I'm going to throw that over to you because I think you're the best to speak to that. And I'm curious to get what your thoughts are on how we can leverage spending accounts, maybe to predict some costs, but also offer flexibility to our employees.
Thanks, Lauren. Yes, this is my favorite topic. So I don't want to spend too much time explaining what an HSA is. So we have a slide here for anyone, and then there's a QR code that goes to a one-pager if anyone's curious as to what a health spending account is. But to speak to what you were saying, an HSA in our industry has always kind of been positioned as an ancillary benefit that's kind of hovering, even in our text literature for our GBA programs or SEEPS programs and everything. It's always kind of hovering over here, but what we've discovered is that a health spending account is a great way to actually support a traditional insurance plan. And I've actually recently decided to kind of crunch some numbers and stuff to see if it could actually be an ROI engine and found that there are a lot of ways that it could be. I also wanted to quickly touch on something that maybe people don't know, but with an HSA, you can carve out what you want on the plan. So it doesn't have to be everything on the health spending account list. It's called the METC, and it's basically the list that from the CRA that dictates what we can approve under a health spending account. But you don't have to include everything on that list. So if you have a lot of employees that want to use Ozempic, for example, you can get an HSA and have prescription drugs. That way you have an Ozempic carved out plan that doesn't drive high premiums in your insurance plan. So there's a lot of creative ways to look at an HSA. It's really interesting once you dive deep into it. So you really just have to kind of think about it differently than the industry historically has. And from the employer perspective, just for everyone's information about an HSA, it's completely cost controlled. So if you give your employee $1,500, that's how much they're going to spend. It's completely cost controlled spending account. There's no premiums for the employer or the employee. So it's your employee, in fact, can actually use an HSA to reimburse the premiums that are pulled from their pay for the group benefits plan too. So you can actually give them a more flexible benefit that way. And then admin costs with an HSA are only based on utilization. So there aren't any standing fees or anything. We pend and deny claims for free. We only charge when there's an approved claim. So there's so much control over cost with that. And then from the employee side, you have flexibility, especially if you add a wellness spending account and everything like that. And then the way that an HSA can kind of support, and I call it hugging insurance because I think it sounds cute, but basically it can pay for the deductible, it can pay for the copay, it can pay for the premiums that the employee is paying, and it can cover things that insurance typically doesn't cover. So, there's some fertility expenses that insurance has a hard time covering, gender affirmation care, Ozempic, off-label prescriptions in general, adult orthodontics. So over the age of 18, you want to get a new smile, that's covered by an HSA. And then a lot of those paramedics that you talked about, or paramedicals, sorry, that you talked about that are holistic in nature. So traditional Chinese practitioner, naturopath, things like that. So to break it down, when you combine the two experiences, and you look at the employee experience and the employer experience, you can actually calculate not just cost containment, but measurable ROI. It's an ROI engine. And I'm not going to start a math class here, but I actually do have formulas for this on my LinkedIn because I'm such a nerd. I made a recruitment, productivity, presenteeism, and retention formula where you can actually measure the ROI of having good benefits in place. So any advisors or plan admins that are thinking not about just cost containment, but maybe having a way to have your benefits give back to the company, that's a really great thing to kind of consider. And it sounds funny to say, like, it's a cost containment thing, you should add another product. But if you look into it deeply enough, it actually really can be.
Awesome. That was incredibly helpful and insightful, Danielle. Thanks for sharing that. I love the way you broke down how HSAs can complement or even replace certain insured benefits, while giving employers more control over the cost. A big theme in what you shared is the flexibility. But of course, flexibility can only work if employees really understand what's available to them. So with that in mind, Stephanie, I'd love to bring you in here. From your experience working directly with clients, what are some of the ways employers can help employees better understand and actually use their benefits?
Yeah, that's a great question, Nat. I like to think that education actually starts before an employee is even hired. So how often are you going through the interview process and you have candidates ask you, what does the benefit plan looks like? Before I make a decision, for some people, it is a very deciding factor, big deciding factor of whether or not they would accept an offer for the company. So I always suggest putting together a little one-page summary. Doesn't have to be long, but just very high level, highlighting the key features of your benefit plan, just to provide to that candidate that may ask you in the interview process. Since they're technically not employees just yet, I wouldn't recommend providing them with your full benefits booklet, just because, again, they're not part of the plan just yet. So having access to that confidential booklet is probably not recommended. Now, let's talk about these benefits booklets because if you've seen a benefits booklet, they are extremely long, close to 100 pages. They use insurance jargon, and it's very, very hard to interpret what is actually covered and how to go about claiming and things like that. So we always recommend hosting maybe an information session, a lunch and learn. We've done a couple, Lauren and I have done a couple of in-person ones, or our default is virtual, but they are a great way for the team to have a better understanding of not just what is covered under your benefit plan, because you can, again, get a very clear summary of that on your benefits booklet, but we really dive into more of the how does coordination of benefits work? It's frustrating, especially when you have a hybrid plan when there's an HSA or another spending account. How does that coordination work so I'm maximizing the full potential coverage I have? What do I need to remember when I'm traveling? Can I go to any country? Is every country free for all, or are there some limitations? What are the eligibility requirements? What are the timelines? Can I add my dependent in 4 months' time, or do I need to add them now? So whenever we host these lunch and learns, we always recommend recording them as well because I typically say, hey, it's a great tool to use when someone is onboarding to get them to watch this recording as they're onboarding into a new company. I also do want to preface though, like a lot of these sessions, the timing is really, really important. So sometimes we come across like when should we host these sessions? What's a good time to actually have it? I think if you are implementing a group benefits plan for the very first time, maybe your demographics of your employees are a little bit younger. They haven't had a benefits plan ever before. That is a great time to host a session so they actually understand it. A lot of times, and not just when it comes to benefits, I think people are afraid of what they don't know. Or they're dissatisfied of what they don't know because they think they don't have coverage, but it's just because they're not utilizing it to their full potential. Um, I also recommend when you are implementing any plan design changes, we typically see a lot of people do an employee session to kind of announce what the changes are that are happening and talk about them, the effective date, how it will impact people. If a session isn't possible during that time, I think at the very least, a communication piece should be distributed to the employees. So maybe about a 30-day notice to employees, just letting them know what changes are coming up, the effective date of those changes, and like I said, if anyone's going to be impacted, where they can reach out for some assistance. Now, even though education is very important, we do pride ourselves on being very education-focused advisors. Everyone should also understand that after these sessions, we do typically see utilization increases. So if cost containment is something that you are concerned about, you may just want to rethink the timing of these sessions as well.
Awesome. Thanks, Steph. Yeah, I feel like helping employees understand the why behind their benefits can really change how they use them. Lauren, to round this out, I'd love to pop back over to the strategic side of things. How should employers approach total rewards planning, especially when it comes to budgeting for renewals and keeping costs under control?
Yeah, another great question. I think before we even dive into budgeting and total rewards, it's important to have a pulse on utilization. And the reason for that is to limit the surprises come renewal. Because, of course, leadership teams, we can have a budget in mind of what we think we maybe in plans that what we maybe want to roll out come into a new year. We're in December here, so we'll say new year. However, if the bottom line stems some surprises. So from if we receive a renewal, for example, if it's different from what we thought it was going to be, then it's going to have an impact on what next year's plan actually looks like and what coverage we're going to be able to offer as we go forward. So that's why, of course, always having a pulse on the utilization through maybe quarterly reports. I know our team sends out quarterly reports, and then just making sure you're reviewing your renewal well in advance. This way, if you do need to make changes at any time throughout the year, but as we approach the renewal date, if you do need to make changes, you certainly can start to explore them and still have enough time to implement them before maybe some of those increases go into effect. Separate from the budgeting side of the benefit plan, it's also very, very important to know what employees want. So many occasions, I know Steph and I, and I'm sure Danielle as well, so many times we speak with plan sponsors, leadership teams. We provide, benchmarking reports. We speak to kind of what others in the industry are offering, some common trends. And based on that, that's what a lot of companies are basing what their plan should look like. Now, as we know, what may fit one doesn't fit everyone else. So it is important to get some insight from team members, but also look at your own utilization if you already have a benefit plan. Seeing the areas that people are using the coverage, what specifically they're using, so that this way we're not taking a cookie cutter approach, of course. We always want to customize it so that when we implement any changes, it's going to be something that your employees actually want. So many of us narrow the scope to a benefit plan to be comprised of life insurance, our health, our dental, but there is a lot more that should be considered, especially when we speak and kind of put it all under one umbrella of overall total rewards. It's beyond just salary increases and adjustments. So when we look at a benefit plan, that's also looking at, employee family assistance programs. So whether that's mental health support or legal, financial. I mentioned earlier a holistic approach to health. this is part of it. Also, virtual care. So being able to access medical professionals from your home. It also means if people don't have to go to the doctor, they don't have to take as much time off of work. They're at home in the comfort of their home. And then, of course, spending accounts, which Danielle spoke to. And then what we're seeing a trending kind of ask right now is retirement. People are very, very interested and want to make sure that they are set up come retirement. Maybe we're all going to retire at a young age, so I support that and I appreciate that. And that's what we are seeing. We see people of a younger demographic coming in right away and wanting to ask about a retirement plan. As Steph mentioned, reviewing an overall total rewards, their benefit plan, in addition to their salaries, that's part of the conversations even before, some prospects become a new team member. And then, of course, data just is pretty consistent year over year in that employees rather see enhanced coverage than receive maybe a $5,000 salary.
Awesome. Appreciate that overview and tying in the strategy behind making the planning choices. But I also know that employers can sometimes struggle with the operational side of things. So, Stephanie, I'd love for you to pop back in, put our admin hat on for a moment. What are practical ways to stay organized with enrollments and life events so that nothing's falling through the cracks?
Yeah, this is something that I am very passionate about. I see a couple of familiar names here with some of my admins that I work with. The administrative burden of just keeping up to date with all of the items that you have to report back to your insurance carrier can get overwhelming, especially when that is not your only function. You are probably someone wearing many, many hats at the company. So I live by these three best practices that again, like the admins on the call that are familiar with me, are very, this is no new news to them. But the first one is just to familiarize yourself with your eligibility requirements. Makes things a lot easier being able to quickly distinguish, is this person eligible for benefits or are they not? So look out for things like, are they a resident of Canada? Do they work the minimum hours of week per outlined in your policy? Do they have provincial coverage? If they don't have provincial coverage, how does your insurance carrier handle that? Some carriers, you can still be put onto the plan if you don't have provincial coverage, but they won't allow you to be enrolled into the health benefit. Other carriers, they say you're not eligible at all if you don't have provincial coverage. So eligibility doesn't also just stop at employees. Dependent eligibility is a big thing these days. Most notably, the one I always point out is cohabitation minimum timelines for common law partners. Some default to first day cohabitation. So the very first day that you move in together with your partner, that person is now eligible for benefits. And then some carriers have a 12-month default. So at the 12-month anniversary of your cohabitation, that's when your partner is eligible. So the onus is still to notify you on the employee when these life events occur throughout the year. But if you know how to triage them as they come in, it'll just make the process a lot smoother. The second tip is, again, I live by this one, is just to make enrollment part of your onboarding. And what I mean by that is if you have a waiting period on your plan, we see typically a 3-month waiting period on a lot of policies. Don't wait until the 3 months are over to enroll your employee. Carriers all have very sophisticated systems where they will only activate the benefits on the calculated effective date for that specific person. So the reason why I stand by this best practice for two reasons. It reduces all of the follow-up work that you as an administrator have to do. So you don't have to set up a reminder at the 2-month mark or the 3-month mark to then start the enrollment process for that new hire. And then number two, it also reduces the chances of you running into any late applicant situations. Almost all insurance carriers operate this way. I always say 31 is the magic number. So you have 31 days to enroll that person from when their benefits should have been effective. And if you wait until their true effective date, then that's only giving you a 31-day window rather than a 4-month window where you can spend that time chasing down the employee, because we all know employees like to drag their feet completing these enrollment documents. Now, if you ever miss that deadline, that 31-day window deadline, that employee is going to be considered a late applicant. And What that means is it's not impossible to get them added onto the plan, but it's going to involve a little bit more paperwork and it's going to be subject to approval from the insurance carrier. Last but not least, and again, my admins will be very familiar with this, is to not be afraid to ask for help. You are not expected to be subject matter experts when it comes to the benefits industry. That's why we're here. And your advisor should be able to be the person or the people that you go to liaise with instead of dealing directly with the insurance carrier. As we know, that sometimes can get frustrating on everyone's behalf. So it's always safer to ask than to risk any sort of potential liability issues that may come up if something's done incorrectly.
Awesome. Thanks for that, Stephanie. I'm like thinking, am I the employee that's dragging my feet? I feel like I need to go action all these things on the benefits side now. I'd love to end on, a more forward-looking note and a question for all three of you. As we head into 2026, what is the biggest opportunity you see for employers to improve their benefits experience for their employees? Danielle, did you want to kick it off?
Sure. I always say that a company can talk about their values like all day, every day. They can put it on posters, they can put it in the lunchroom, but if their benefits don't speak to those values, then that's like not really walking the walk, you know what I mean? So I think that the best thing to do right now is to Lauren's point, sit back and look at the utilization, see what employees love, see what employees are not using as much, see where you can bolster your benefit plan. Maybe if you want to, you can explore adding an HSA or a WSA, a wellness spending account with taxable benefits, and giving your employees that extra appreciation. A wellness spending account can have anything on it. So you can the employer governs what's on the list there. So, for example, we have a WSA for our employees, and we made a category that's just called treat yourself. So that if someone is having a hard time and we want them to go and get a massage or their hair done, actually a massage is on the HSA, so they wouldn't need that, but get their hair done or, go buy a Peloton, do whatever they need to do to treat themselves. We have that categorically set up for our employees. I would really recommend that plan sponsors and advisors sit together and really think about what are the values that our company is trying to uphold, and then how do we work those into our benefit plan.
Awesome. Steph, what do you think the biggest opportunity is for employers and their benefits experience in 2026?
Yeah, I'm going to say technology. I'm really, really excited to see what new technologies are going to come up in 2026. We already currently have an integrated experience with our Humi platform and our new EOS platform that will just reduce all of the redundant work that you have to do on both your HRS platform and then on your insurance carrier platform. So things like leveraging AI, we're working on some really cool things. Like benefits monthly upload your bill to your HRS and then have all the deductions automatically populated. So really, like I said, leveraging AI and see what tech can do to make everyone's jobs a little bit easier.
Awesome. Lauren?
Yeah, I two tough acts to follow there. Overall, going into the new year, just make employment easier. Provide a sense of security to employees so that they feel confident knowing that they're supported, both with their health, their dental, but also their financial wellness. Make that a priority. I mean, Danielle did a wonderful job, kind of just answering that right there, just before Steph. You hit the nail on the head. And that's something that if they know that they are taken care of and that their employers are focused on their well-being, they're going to be able to do the best work for the company. They're going to put their best foot forward.
Awesome. Great. We did leave some time for some Q&A. I have one. It's actually for Danielle from Ruth. Ruth is asking about a few more examples of how they can use an HSA to reduce cost of prescription drugs. Did you have maybe one or two examples you'd like to share here? And then I'm sure you and Ruth could connect following the webinar.
Yes, definitely. Thanks for the question, Ruth. So, under an HSA, the rules for prescription drugs are a little bit different than insurance. So, you don't need to have any proof of medical necessity. You just need to have an official prescription receipt. So, what we need to see is that The doctor wrote a prescription for you to get this, and you went to the pharmacy and a pharmacist intervened, which is a funny word, but a pharmacist intervened with you receiving the drug. So there are examples of drugs that aren't technically prescription drugs, but if a pharmacist intervenes to administer it to you, for example, metformin, or not metformin, baby aspirin is a lot of times used in fertility to help blood flow get to the uterus and everything like that. Baby aspirin is an over-the-counter drug. That's something that's not typically eligible under insurance or an HSA. But if a doctor says that a pharmacist has to intervene in dispensing that drug to you, it's eligible under an HSA. When it comes to high cost drugs, an HSA is a little bit more limited, of course, because every dollar you put in the employee's account is going to be available for them to spend. So there's going to be, let's say, a $1,500 HSA that might not be enough for a high cost drug throughout the year and any other coverage. So you really do need to have them in tandem. But another thing you can do is an insurance or an HSA can pay for the premiums for a health insurance plan. So if an employee wants to go get their own extra coverage, they can actually expense the premiums that they pay for their own coverage through an HSA. So there's a lot of different creative ways to help with the premiums of drug claims, but the eligibility requirements are a little bit different for an HSA. I hope that answers your question.
And we'd have another question that's just popped in. Is there a maximum to how much you can have on an HSA, or is it unlimited?
It is not unlimited, unfortunately. The CRA would not like that very much. So an HSA typically has to land between 10 to 15% of someone's normalized income. So the reason it's a normalized income is because you might be a shareholder of a company and you've got dividends and you're making lots of money and you say, okay, well, 15% of that is a pretty heavy, like hitting HSA. That's not really what they mean. They mean normalized income. So the best way to explain that is how much would you pay someone else to do your job if there was a succession? In that case, that's the amount that you would use as your normalized salary, and then you would take the 10 to 15% of that. And that kind of works across the board. There's a lot of different little tricks and things you can do to make sure that shareholders don't have way more than other employees and things like that. There's a lot of different tips that advisors share. And I actually, on my LinkedIn, I talk about this stuff quite a bit. But yes, the reasonable amount is between 10 to 15% of someone's income. So there is a limit. The limit has to exist.
Okay. And then there was another question that came in regarding the HSA, regarding family coverage. Does the employee and dependents share the HSA amount, or do they have separate HSA amounts?
So that's totally up to who is building the plan. So if you're an employer and you're working with your advisor to build a plan and you want each person in the family to have a pocket of benefits, you can do that. And you can have it so that, let's say you have a family of five and everybody has a certain limit. You can have it so that each person has an individual limit that when it runs out, it can't be used for other family members. You can make it pooled so that it's a general amount, but it's per person so that a bigger family has more money to spend. And you can just make it so that it's a fixed balance for the employee. And we do see that most of the time. So usually it's a fixed balance for one employee. And then with an HSA, it does have to be classed out appropriately based on business logic. You can't just be like, oh, I like these employees the best, so I'm putting them in this category and giving them 10 grand. But these employees are like low performers. I'm not going to give them as much. You can't do it that way. It has to be, single family couple or part-time, full-time, or employee, manager, um, executive, or something like that. So you can actually customize an HSA right down to the dependents and how much everybody gets, as long as it follows business logic and doesn't just say, I like this family the best, I'm giving them more money.
Awesome. And then Stephanie had a follow-up question. Is there a copay model for HSAs, or are they fully employer funded?
They are fully employer funded. So we can have it be 80% coverage so that the employee has skin in the game and pays that out of pocket. So for example, you can just make it so that if someone has a $100 claim, they only get paid back 80%, but you can't have employees contributing to their plan. Does that make sense?
Yes. Um, Either Lauren or Stephanie, can you weigh in on how Employment Hero plays a role in benefits and the offer there?
Yeah, absolutely. Great question. So, Employment Hero, our team is made up of some licensed advisors. So in Canada, in order to have a benefit plan, you have to go through an advisor. So what our role is we're a fully licensed brokerage, so we are carrier agnostic as well. So in terms of that, we work with carriers. We are the middle people, so that we work with plan sponsors to kind of create a plan, and then we of course also work with carriers, so that if your team members have any questions, as a leadership team, if you have any questions, renewals, if you ever want to go to the market and look at other insurance carriers outside of Sun Life, I think your example here, we're the ones that do that for you. So we're an extension of your team essentially. So that's what our role is.
I'll even add to that, Lauren. Any of our clients, they're always going to get assigned a dedicated portfolio manager, so someone on Lauren's team, and then a dedicated benefits experience manager, someone on my team. And as Lauren mentioned, portfolio team is there to look at the renewal and all that. On my team, though, if anyone is a client of ours, like I said, you have a dedicated experience manager. Health and dental claims for employees are supposed to be kept confidential. A lot of employees don't feel comfortable going to their employer talking about these claims that might have been declined or anything. So then they just swallow and they sit on that frustration. We are always available for them to reach out to us directly. It can remain confidential. We can remove the admin aspect of it so that they do feel comfortable coming to someone to chat through the issues that they're having. And our first response time is within 24 hours. We, again, keep everything confidential. If for whatever reason we need to involve anyone at the company a little bit higher up, we make sure we have their approval in writing first as well, too. So it's there to just sort of remove some of that administrative burden to go through any of the coverage questions or the claims questions as well.
Awesome. Thanks for that. I think that's all we had for questions at that point. So I just really wanted to thank everyone for being here this afternoon. And thank you to our speakers for all your insights today. We really hope this session give you a strong foundation as you plan for 2026 and beyond in terms of benefit strategy. The recording will hit your inbox over the next few days. And in that email, you'll also find a direct way to reach out to this lovely team if you have any follow-up questions or need additional support. An Employment Hero, like the gals mentioned, we're here to make HR and benefits easier so you can focus on running your business and other important tasks. Have a wonderful day, and we will see you on the next one. Thank you so much.
Thanks,
Thank
everyone.
you.
Thanks,
Sure.
everyone.